Go across to Kunal. Kunal, I'm sure that a lot of people have questions about where the benchmark is heading in the near term at least. It seems that we've been range bound for a bit. Is that likely to be the case for the near term at least? Are you looking at a range bound movement for the benchmark?
Today, I think if I'm not wrong, of the index consolidating in this 200-point band, 15,700 approximately as a lower end of the support, and 15,900 as a resistance. But this is a long consolidation. I think this is stretched, far more higher than what one could probably have imagined for the indices. And typically, I believe that after a 3-week kind of a hiatus, I think the index should break out of this consolidation. The banking stocks are making a comeback, specifically like the ICICI Bank is trading at a fresh short-term highs for itself. SBI is very close towards the breakout for itself. So I think on the back of it, I would expect the breakout to happen pretty soon on the indices. So the consolidation is going on, but I believe that very, very shortly, the breakout could come back on the indices. The global markets are also settling in. So that's an additional point of comfort and confidence for our market. So till the time we see these comforting signs coming across from the globe as well as market internals, I believe there is a much higher probability that we can break out yet again on the upside.
Okay, let's get on board our next query, and this one is coming in from Feroz. He's saying that he's bought SBI Cards, 250 shares at the level of about 1,000 rupees per share. He wants to know what's the medium term to long term prospect of SBI Cards. I believe he wants to know on the chart front of SBI Cards. Kunal, on the charts, how does SBI Card actually look like?
It's attractive. In fact, we've been discussing this stock earlier as well, Cheryl, that the stock we went through a rally, then a consolidation twice in the last, I think 4 months or 5 months. It's tested its 200-day moving average. So I think the last time it tested its 200 DMA was in the month of April, where the stock corrected to 900 levels. Post that, it rallied to 20% to almost 1100, 1125. And then yet again, the stock from those 1125 levels have corrected back again at those 200-day moving average, touching back towards 940, 950 mark. So twice it's completed this retracement, which indicates that this 200 DMA is a very strong and an important support level for SBI Card. So keeping that in perspective, I believe that it should be a good decision to try and buy the stock or average the stock further closer to this critical moving average.
Okay, we've got a stock that one of our viewers, Somitra, is asking about that is not covered very often. It's a stock called InfoBeans Technology. It is apparently a small cap IT company that is currently got a market cap of about 1,000 crore rupees, but it's had a stellar year so far, or rather last 12 months or so. It's gained about 355 odd percent. Shahina, I believe that you do have coverage on this counter. The question is, would you suggest entering at this level, and what on the fundamentals would you bear in mind if you were to talk about this small cap IT company?
Disclaimer, I also personally hold this stock, and after there was a bonus issue of 1:1 in March. After that, I think the numbers that came out in the fourth quarter were they beat the estimates, and I believe that the business is growing rapidly. They have more than 2.5 million customers, and they are offering fintech solutions or to these 2.5 million customers, which I think is growing at a very rapid pace. Also, I think some of the digital solutions that they are offering for the e-com space is going to pick up pretty fast in terms of volumes. So I would suggest that the investor not only holds if he's holding it, but also adds at every decline and hold it for the medium to longer term.
This query is coming in from Emmanuel James, saying that he has KNR Constructions, which he's purchased at 231 rupees per share. He wants to know whether this counter will reach 280 rupees per share, and he wants to know, can he add some more at the current levels? Kunal, what's your take on KNR Constructions? Emmanuel has bought shares at 231, wants to know whether it will surpass 280 rupees per share levels, and does it make sense for him to add some more at current levels?
So, the pause. At times the consolidation is more than 4 months or 5 months on a trot. Similar was the case, I think, in the month of January and February 2021, when the stock had hit those levels of 220, 225, remained in a consolidation band for almost 4 or 5 months. And in the month of April end and May beginning is where you saw the stock breaking out of this consolidation. So the only catch with this stock is the amount of time correction which it can go through. At times it is 3 months, at times it could be more than that as well. So if the viewer can hold on to the stock and has that much of a patience, then I believe it makes sense to hold on to this name. And yes, I think if the time correction happens this time around as well for KNR Construction, then you should be taking opportunity of that. So maybe if the stock comes back towards, say, 225 to 30 odd levels, yet again with the time pause in between, then I think take that as an opportunity to buy again. If the breakout happens like what the stock has shown in the last many attempts, then I believe a possibility of 280 as well could be very high. The only concern, as I said, is how much time the stock would take to pause in between before it starts to rally again.
Okay, we've got a question from Manohar on Union Bank of India. He's bought at levels of 39.4 and he's asking if we should hold or sell at this point. Shaina, I'm coming to you on this one. Among the public sector banks, would you say that you would rather prefer a name like an SBI or maybe a couple of the other bigger ones? What would you say to this investor?
I think Union Bank as of now is on a very neutral phase in my view. I think it will consolidate at current levels. So if one really is looking to invest in a long-term story, I think SBI would be a better bet, one of the best in class, or Bank of Baroda if you're looking for the PSU space.
Okay, this one is from Abhishek Bhandari. He's saying that he has Tata Power shares which he's purchased at 128 rupees per share levels. He wants to know, can he hold on to the stock for the next 2 years? And so, if so, what sort of a target should he actually look at? And also, if not, then which other sector should he look to switch to? Kunal, what's your view on Tata Power? Makes sense for Abhishek to hold on to this counter for the next 2 years? What sort of a target can he look at? And if not, then which other sector would look good?
We're extremely bullish on the power sector, and I think specifically on Tata Power have been reiterating that the stock has confirmed much stronger breakouts on the long-term charts. In fact, the stock is still not hit back to its all-time high levels. I think if I'm not wrong, it's 155 to 160 odd range is where the 2008 2009 highs for Tata Power, and it's just that off late the stock has made a comeback. Now, long-term wise, it looks very attractive, and I think the stock has the probability to try and hit back towards 150, 160 levels in the medium to long term. So I think you should hold on to your investments over here. The longer you can hold, and the stock gives that breakout, of this 155, 160 band, which is an all-time high level, this could open up, much more room on the upside for such kind of power stocks. So I would suggest a hold on Tata Power and take it very gradually. If the stock manages to break out of 155, 160, then I think targets should be revised on the much higher side for the same.
Okay, I'm going to club a couple of questions because one is not really a stock specific question. The first one is from Surya Kunal, and this one's for you. Aurobindo Pharma on the charts, he's asking whether it can be bought at the current price, and this is for the short to medium term. And Dikshita has got a general question. What is the minimum percentage dip according to you that would give you confidence to buy a stock if you were to say buy on dips is your strategy?
Okay, so we'll start off with Aurobindo Pharma first. We've been discussing that how there are times when a stock gives you a long-term breakout or breakout on the longer-term charts. But all of a sudden, when the stock becomes completely overcrowded, you see the stock going into a bit of a pause or a time-wise correction. Same is the case with Aurobindo Pharma. The stock broke out of its multi-year resistance in the month of April and May around those 1,000 odd levels, and then from there on it's going through a time correction. So I think you should take opportunity of a time-wise correction. When you're looking at investing into stronger themes from a much more longer-term perspective. So I would suggest a buy on dips approach for Aurobindo Pharma, and I think at current levels as well, it should be a good buy on dips at current levels, given the fact that the stock has already broken out of its long-term resistances. Now to the other question, where typically we look out for buy and dips as a as an approach towards stock specific buying. Now, the percentage, of course, varies from stocks to stock. For example, if you're looking at stronger large cap names, like maybe if I can give you an example like a Reliance or an ICICI Bank, SBI, etc., then we typically look out for maybe a 5 to 10% kind of an average dip as a good opportunity to try and buy, because these are typically low beta stocks. They are not prone to very high periods of correction. So if you expect, for example, ICICI Bank to correct by 20%, then you are expecting that the index will also correct by a similar kind of a magnitude. So which is why typically we say that 5 to 10% is a good enough correction zone for a large cap name. For high beta stocks or the mid caps and the small caps, the percentage of course increases up higher significantly because of their nature of the volatility and the trend. So these stocks can have a capacity of rallying up maybe 50% to 100% in a short span of time. Before these stocks, they get succumbed to a selling pressure by 20% to 25% at max. So I think those are the kind of themes which you look out for. So if you are looking at large cap names, then I believe a 5 to 10% as an average correction should be taken as buy on dips, and for mid caps and small caps, the percentage of course increases.
Okay, this one is coming in from Bharat, and he's saying that he has Godrej consumer shares in his portfolio, which he bought at 697 rupees per share. He wants to know whether he can go ahead and add some more for the longer term. He actually wants to know what is the correct level to enter Godrej Consumers. Kunal, what's your take coming in on Godrej Consumers? Bharat already holds in his portfolio, wants to hold it for the longer term, wants to know what's the correct level that he should look to enter into Godrej Consumers.
Markets, I think one thing is very clear: you can never buy at a perfect price for any stock. You tend to achieve or come to a certain apt price for a particular stock. So if you're looking to if you're starting to invest into a stock like Godrej Consumers, which has done phenomenally well over the long term, then I believe that the current juncture itself could be a good starting point. Once you start off into your journey into investing into these kind of names, then use those classical which we just discussed sometime earlier, a buy on dips kind of an approach to try and average it out further. So because in that manner, even if the stock moves up higher, you don't tend to miss out. And anytime when the stock gives you a correction, there is always a much higher capacity which you can probably try and average it out further with. So Godrej Consumers is a stock where you can look to start buying at current levels. And as a classical reversion point, if for example the stock reverts back towards a 50-day moving average, for example, then I believe that should be a good starting point for you to average it out further.
Okay, the next question is for you, Shahina. We've got Sagar who's asking about Aarti Surfactants, which is a subsidiary of Aarti Industries, and it's part of his small cap portfolio. I must point out right at the start, because a lot of our experts tend to caution Sagar about his portfolio. He's got a very well diversified portfolio. He's holding Aarti Surfactants 250 shares at 553 rupees per share. He's wondering about the future prospects. What would you be able to tell him about this?
I think it's one of the stocks that have given a very good return, and even with the investors making good money. I think 1,500 rupee level is possible over the medium term. And in terms of fundamentals also, I think the whole chemical sector is in fancy, and I think sentiment wise also the sector will continue to attract investments. So he should continue hold and look for high levels to maybe book profits.
This one is coming from Abhishek Ray, and this one is for you, Kunal. He's saying that he's bought Aurobindo Pharma from the levels of between 980 to 940 rupees per share level since the last 1 month for a short-term trade. What's your view on this? Is this the right strategy? What should actually Abhishek do with his holdings with Aurobindo?
You should continue to hold on. We just discussed earlier that I believe Aurobindo Pharma is at I would say a good support territory around 950 mark. It's showing signs of triple bottom. So the last 3 attempts where the stock had tried to penetrate this levels of 950, every time it does it, and there is a lot of demand which creeps into the stock, which means that that's now acting as a strong support territory. So I think this 950 level is a good enough level where the stock is trying to consolidate and take support and bounce back every time. And I would sense that it's getting ready for a breakout very soon on the upside. So I think if you are in from a short-term view to long-term, short-term to medium-term view, then you should hold on to your investments on Aurobindo Pharma. Near-term wise, once the breakout happens, I would expect 1080 to 1120 as a potential target range for the stock.
Okay, I'm clubbing another couple of questions here. Shahina, this one's for you. The first one's a generic question, but I think it's a fair question because you see, according to AB, a lot of stocks that correct very sharply after the earnings. He's asking if there's a logical reason. Is it simply that positions are built into stocks, major ones, before the earnings, and those get unwound or reacted to post the earnings? Is that the main reason? The second question for you is a fundamental view on Rain Industries. We've got Rajat, who's holding 110 shares at levels of 194 and wants to add more. Should he do so?
First point, I think, some of the very well covered stocks, to an extent, a lot of the results is factored into the price. So if the numbers meet expectations, we see a bit of profit booking. But on the other hand, there is also the case of some of the smaller stocks, mid-cap stocks, which may not be covered and which come out with either very good numbers or very bad numbers. So those are the stocks that actually react to the numbers. So it will really depend on the stocks that you're talking about. And on Rain Industries, I think Rain Industries is, one of the better, I would say, stocks in the overall sector. But I think the stock has given a good performance in the last, I would say, 6 odd months. So to an extent, it will again consolidate. But I would say you can still look for a price of about 380 rupees in the over a 1 year period. And I would continue holding to the stock, keep a stop loss of close to about 220.
And this next query is coming in from Divya. She's saying that she has JKET India, which is purchased at 114 rupees per share. Levels, she wants to add some more. Please suggest if she can buy some more at current market price. Kunal, what's your view? Do you have coverage on JKET?
Apologies, Cheryl, I don't track the stocks, so won't be able to comment.
China, do you track JKET India by any chance? Or would you want to offer any comments on this particular counter? Makes sense for one person if they have invested. Does it make sense to hold on to it or add some more to their portfolio?
No, sorry, I don't cover this stock.
No problem. Let's move on then. Let's get your views then on this one is coming from Jayant and he's asking whether he should exit BPCL and HPCL. He is holding 500 shares in both the companies. He's not actually mentioned as what sort of levels has he purchased these particular counters. But on the charts, Kunal, how are these OMCs looking like? If someone has invested, do you think it makes sense, if they are booking profit, makes sense for them to go ahead and exit this particular counter, or should one stay put for the longer term in both of these counters?
I think if you're looking to book out profits, then it could be it could make a good sense to try and book out profits over here. That would probably depend on what has been your entry price or your purchase price on BPCL. So if it's for example sub 400 levels, then I believe it's a good strategy to try and book out profits. But for fresh investments, I believe that the stock will probably take some bit of more time. I think this is the 5th or the 6th straight week where you're seeing the stock going through a corrective phase. Typically, the correction lasts for maybe 7 to 8 weeks on a trot, and if that happens and the pace of selling intensifies, is where you typically see a bottom formation process in place. So I think at current levels you can book out profits, and if you're looking to rebuy, assumingly your investments or your trades on BPCL, then I believe maybe wait for another couple of weeks. If the stock comes back towards say 420, 425, that could be a further good level for you to maybe rebuy what you've sold at higher levels.
Okay, we've got a question from Mayank, and the question, I think, Shahina, is out of hope that you have coverage, considering that you also had coverage on Infobeans. This is a counter called LG Balakrishnan and Brothers. LGB Bros is what it's called. He's got a holding of it at levels of 350. It's up significantly in trade today, 9.2%, 9.3% higher. What would you say on the fundamentals if you do have coverage?
Well, yeah, the stock is doing very well and it looks very bullish on, the charts. I think the numbers also were pretty decent. You had a 40% increase in revenues in the last quarter. So I believe, one could continue holding based on preliminary numbers that I have. But beyond that, I really would not be able to comment.
Okay, this one is coming in from Rashmi. She wants view on MCX. She's holding the shares, holding MCX in a portfolio, which she's purchased as a share at the price of 1,618 rupees per share. What should she do? Does it make sense to hold on to MCX for the longer term, Shahina?
Yeah, I think one can continue holding on to the stock. We have some large investors who are also adding on positions, and I think with the very low penetration that we have as of now, both in commodities as well as in the related currency spaces, I think over a period of time volumes will only increase, and one should continue holding. I would say MCX.
Okay, Bharti Airtel, it's not done too much in the year-to-date period, and I think that's the reason why Nivin is asking when Bharti Airtel will move out of his consolidation period or consolidation zone. I guess this question, Kunal, is for you. On the charts, what does it look like?
Very difficult to anticipate. Alex, I've been tracking the stock since quite some time, and every time the stock tries to attempt a break of this 550, 560 mark, you see a lot of resistances creeping in, fresh selling, which emerges into the stock, which means that the stock is not ready for a breakout yet again. And I've spotted this very typical tendency for many of these stocks which are surprisingly into a range bound kind of an action. So I can probably club even an ITC in that category where the stock takes resistances almost on a regular basis around this 210 to 20 range. Now for both of these names, typically for Bharti Airtel, for example, there is a phenomenon of call writing which happens, and because of the call writers which tends to come back to a strikes of 550, 560, it becomes very difficult for the stock to break out of those resistances because of the emergence and the presence of so much of call writings. And typically when that happens, you see the stock taking resistance, and all those short-term rallies or potential breakouts, they get failed and the stock comes back into a range. Now for a breakout to happen, you need to see the call writers getting unwounded very, very swiftly and very quickly. Now that could probably happen on some sort of a news flow, some event, etc., which could play out, or maybe a big breakout on the indices as well could trigger these kind of unwinding of call options. So I think that's the important feature to watch out for. Once you see an unwinding of call writers happens into these kind of names, which tends to remain more range bound, is where you see the change of behavior. So from being a range bound stock, the stock would start to trend up higher. So this is a phenomena which you need to spot out for stocks like Bharti Airtel. As of now, there is a lot of presence of call writers, which is playing a resistance to the stock.
And the others,
Okay, let's take this next question. We've got Sushma asking about MMTC. She points out that we missed it yesterday. Apologies for that, Sushma. It's currently trading at 54. Is it a buy right now? Kunal, a quick view on this one.
Looks attractive, even though the stock is consolidating for 5th or 6th straight week on a trot, but looks very attractive to me on the charts. It's completed some long-term breakout patterns, so it's possible that short-term wise it's going through a consolidation, but long-term patterns look very attractive. Just be patient and wait for the breakout to happen yet again for MMTC.
All right, and this one, particular query is coming in from Raja Rajan on Hykill. Wants the short-term target for this particular counter. Kunal, what sort of a target should one look at for Hykill?
Well, Hykill was one of the stocks which I had recommended, I think in the month of April, when the stock had broken out of those 220 to 40 kind of a range. It's moved up significantly higher, almost doubled from those kind of levels. So it looks attractive. Short-term wise, you can look at maybe a target potential of 550, 560, but I think this is one stock which needs to be held on to it from a longer term view, because the rally you've seen the last 5-6 months for Hykill from those 200-ish odd levels I think indicates that there is a much more stronger structural change, which could potentially be a stock which could be stronger trending from a longer term view. So I would suggest that rather than converting or looking at this from a short term view, convert your view to more long term. I think that's where real potential could get unleashed for Heikel.
Okay, unfortunately, that's the last question that we're taking, and apologies to everybody who posted late. Guys, if you've posted post 11:35, it becomes very, very difficult for us to take your queries. We try all the same. Let me go across to you first, Kunal, on your high risk and low risk ideas. What are they for us today?
Calls, the first one which I'm suggesting, Alex, is a buy on JSW Steel. Much more stronger and a sturdier stock. Looks attractive. I'm sensing many of these metal stocks are gearing towards a big breakout yet again on the short term as well as on the medium term chart. So this could be a very strong continuation up move for metal names. Hence a buy on JSW Steel, targets of 750, stop loss at 675. And the second is a buy on UPL, United Phosphorus. Again, after a rally and a consolidation, the stock is making a comeback again. A very short term swing breakout on UPL. So from a couple of weeks perspective, traders could look at a buy with 880 as a potential target and stop loss at 800.
Okay, and Shahina, what are your high risk and low risk ideas for our viewers today?
So the first high risk, I will go with Nalco. It's a metal name. Though I would say it is medium risk, basically dependent on the prices of metals. But with aluminium prices touching all-time highs on LME, this is reflected in the fourth quarter numbers that we saw. And I expect with the expansion in capacity, numbers are going to be extremely healthy, provided the aluminium prices continue to remain at current levels. Attractive valuation, 12 times PE. I would, last year's PE, 12 times forward, 1 year forward, it's almost about 8 times FY23 PE, which is extremely attractive. So I will give a target of 100 with a stop loss of 75. The second one is Birlasoft, which I would recommend for the longer term investor. One is because the valuations are not cheap. At the same time, it is one of the mid-cap IT stocks, which I believe has got its act in place. The management is actually streamlining most of its verticals and putting in good, strong leaders in each of them. I believe with the order book that they have about $123 million, which they had, $326 million, which they had order book in hand in the last quarter, is going to drive a strong revenue growth, EBITDA margin expansion. Operationally, it's improving. So I think this is one good mid-cap IT stock which you can buy and hold for the longer term. Here I'll have a target of 440 with a stop loss of 330.
All right. Thank you, Shahina, as well as Kunal, for joining us on your show, giving us a view on DMart, also resolving the viewer queries, as well as sharing your high risk and low risk ideas. And with that, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.